Welcome to the Property Podcast, where great minds in real estate get together.
Welcome back to the Property Podcast. In today's episode, we're joined by Robert Costomiris, President of Mioym Equities. Robert brings a wealth of experience and insight to the table, and he will be discussing distressed product in the real estate market.
Thank you so much for hanging out with me today.
Yeah, I appreciate you having me on.
Great. So if you were to describe your company in one word, what would that be?
Chaos. No, I'm just kidding. We're a boutique private equity firm that purchases distressed properties across the United States. We fix them up and we sell them off, and we have investors come alongside of us and give them above average return.
Great. So tell me about a time when you raised your highest capital ever.
There's a couple of them. We had a ground up construction project in Dallas, Texas. And then there was a property in New Jersey that needed about $500,000. Those are just two projects. There's multiple where there's millions of dollars, but those are two specific ones where they needed the most capital.
So what is the vision behind Mioym?
So there's a couple, and it's all in the same bucket, I guess you could say. But one is obviously urban redevelopment. We're going into areas that are what we call tier 2 cities. They're not cities that are, and I'm going to use this word gently, I don't want to say decimated, but have had some economic depression to it. But they're coming back up and they're starting to be regenerated. Areas like Pittsburgh, Pennsylvania, Detroit, Michigan. So we like to redevelop them. My partner got involved with row homes in Baltimore, Maryland, and he was redeveloping them. So that's one area. The other area is having investors come in alongside of us and invest with us, and we give them above average returns. So we give them a product that has some sort of security with the real estate, and then they get these returns that are a little bit nicer than average. So they have a secure investment, and then they also get some nice returns. And then the third one is, one of our ways of selling is, because we're in these tier 2 cities, we get families and individuals who have less than stellar credit. We call it our affordable homes division. We help them fix their credit, and we refer them out to an FHA lender, which is a first-time homebuyer program. And we fix their credit up. We refer them out to a lender that has FHA capabilities, and they have the ability to get into a home that they may not have thought that they could potentially get in, because we'll give them down payment assistance as well.
So you really like to take your client through the whole experience, educate them, and put them to a position they didn't know they could be there before.
Correct.
Great. So, and I guess your target audience is?
For which? The investors or the buyers?
Any of them.
The investors, we look for high net worth individuals, people who have investing experience, who have investments out there. And I try to say a small portion of their investable assets, and have them invest alongside of us. And then the buyers that are first-time home buyers, we always list with a local realtor, but we'll also market it out to our affordable homes people. And those are individuals that have less than stellar credit, and they're looking for more. They may think they want a home, but don't think they could possibly get into one. And that's why we help them build their credit and also give them down payment assistance as well.
So what is the most common mistake new investors make when they see the word distress?
They think it's just a beat up home, which it really is. We're not afraid to get our hands dirty with them, but there are limitations to what we do. Here's the real thing is, a lot of people think when you're buying distressed properties, we're going in and kicking people out of foreclosed homes, which we do not do. That is not something that we get involved with. We'll only take non-occupied properties. So if a bank already has foreclosed on it and taken possession of it, that's when we'll start bidding on it. But if we know a property has somebody in it, we want nothing to do with it.
Interesting. So tell us about your biggest rebound story.
Ooh, we've had a couple, mainly in Detroit and Chicago, or Michigan, I should say, not so much Detroit, but we got a couple properties for very cheap, and we had the ability to sell them much over what we were asking and make more money on them. There's two properties we're dealing with now that contractor brought them to us. So we didn't really know too much about the property. We just knew what the purchase price was. We rehabbed it and we're getting ready to sell it. Two different realtors, two different areas, like totally different areas. And there was a second property on the property. So we're in the middle of subdividing it and selling off both properties on both properties. So where we thought we only had two, we had four properties. So that's kind of like the prize in a Cracker Jack box, which a lot of younger people probably won't even know what that is.
That's quite an amazing story, let me tell you.
Yeah.
So tell me something. How do you find the deals that nobody else is seeing right now?
That's a good question. My business partner actually came up with a proprietary technology. And basically, what it does is it takes the multi state MLS, not the actual MLS, but the data that is provided or that they provide. We buy it from a third party, we plug it into our program. And essentially, like any homeowner would do when they're looking for their home and they put the criteria that they're looking for in, we do the same thing, but this does it on a much, much higher level. And it spits out properties that, have the main thing is that they're at a 60% discount to what the perceived market value is. So we're finding these properties, and a lot that's on the MLS isn't actually listed, but it's just on the MLS, if you will. I don't understand it too much myself, but it's not actually for sale, but they just have it on the MLS, and we find a lot of those properties. So they're technically off market.
And so what major changes are you seeing in the industry right now?
It's becoming more of a buyer's market right now. You would think with such low inventory that's out there, that it would always be a seller's market, but it's not. It's becoming more of a buyer's market. And a lot of the properties that are out there are sitting for a little bit longer, and they're not getting the prices that they want. And that goes for both sides of us when we're buying it and when we're selling it. So we've had to come down on prices a lot with some of the properties that we've had.
And what about the interest rate going down?
I think it'll help us, and it's alleviating a lot of pressure. But you have to remember, for the longest time, interest rates were at zero. And a lot of people got mortgages, and myself included. In 2019, I have like a mid 3% mortgage. And I think mortgages are now around like 5 or 6%. So whereas it's not a huge jump, but why would I sell my house right now to go into a higher mortgage? So a lot of people that are sitting on no mortgages with high equity, or they have high equity in their house, they're just saying, why would I sell it? So that's one of the things. But once the perception sets in that interest rates aren't going to come down too much more, which I don't anticipate they do, I think they're going to stay here for a little bit. I think we're going to start seeing it alleviate. I think it's going to start alleviating shortly, but on a slow progress. And you have to keep in mind, in 2020 is when a lot of homes were purchased. And I don't know the data, but I do think that there's a lot of people who bought 5-year ARMs or 6-year ARMs or 7-year ARMs. I think it's only 5 or 7-year ARMs. And an ARM is it's an interest rate only, and then after a certain period of time, it kicks into a much higher rate. And I think you're going to see a lot of those properties either come up for sale or, get foreclosed on, unfortunately.
Tell me something. What is your biggest win? So what's working well in your firm, and what's been frustrating?
There's a lot of frustrations. Construction is a big thing. Whether it's the pricing of everything or just the contractors itself is a huge, huge frustration. It's very hard to deal with. And I don't know that there's a biggest win. There's not one thing I could speak of where I could say, oh, this is a huge win for us. But there's, little ones along the way.
I see. Okay, so which metrics are you most focused on improving?
So first and foremost, obviously, we're looking for foundational stuff and, like electric, plumbing, making sure all that's right. But again, if it's not, we're not afraid to go in there and do it. Overall, we're looking for like kitchens, bathrooms, floors, vanity stuff. But we also want to make sure that the exterior looks good, the landscaping looks good, stuff that makes the property have nice curb appeal and brings it back to life, so to speak. The exterior is a huge thing because obviously when you pull up to a house, if it doesn't look good, you're just like, I don't even want to go inside. So that's a huge thing. But the interior is the biggest thing. Getting the kitchens, the bathrooms. Does it need new paint? Do you have to scrape the old paint off? Does it have wallpaper? Things of that nature.
What kind of style are you going for? Like modern, traditional, transitional?
It depends on the home. And we try to match the property.
And what is your favorite style?
My favorite style?
Yeah.
So I like Tudor homes, but I'm 6'5". So for me to go into a Tudor home does not. My wife and I were looking for homes and fell in love with a bunch of them. And she's like, there's no way I'm going to have my husband ducking through doorways. So I tend to fall for the typical colonial homes. And I'm not set on a style, though. I'm somebody who likes the way a house looks when it's put together, if that makes sense. So one home can look, classical with all wood stuff, wood molding. And then, I could look at another home that's completely modern, still a colonial, but all modern on the inside, as long as it all matches and ties together. But we as a company don't have a tie to anything.
How well is your firm reacting to the constant need of adapting to AI?
We're adapting, I don't know if you could say it slowly or quickly, because the proprietary technology has an AI component to it to find these properties and spit it out. It actually sends out offers to whoever the listing agent is, or if it's for sale by owner. So it automatically does that. But furthermore, on the sales side, the selling the properties, we use AI. On my side, to get investors, we use AI. So we have several areas where we're using AI, and it's growing and growing, every single quarter, I guess you could say.
That's interesting. So you're pretty like, I would say advanced.
Yeah, I don't know if I'd say advanced. If you were here, we're definitely not advanced, but we're trying to implement it in as many areas as possible. Mainly any routine task.
That makes sense. And so tell me something, where do you see your company going 6 months from now and 12 months from now?
So 6 months from now, I don't see us being, too crazy from where we currently are, but 12 months from now, we're trying to ramp up. We've been doing anywhere between 20 and 30 homes a year, flipping them, which it's really not that much. For a company like us, we want to get up to 50 homes, and I think that we could do it within the next 12 months. Get up to being 50 homes a year in the next 12 months.
And 5 years from now?
Yeah, so we want to be more diversified. Currently, we're in single family. We want to get into multifamily, flexible warehouse spacing, and then we want to start doing more and more ground up construction. So we want to be more diversified to have, like a short-term project like the fix and flip, a little bit more of a midterm project like a multifamily or, a small strip center or warehouse, and then the longer-term projects of ground up construction. And we want to start developing communities as well.
That is great. Thank you so much.